Guys, let me tell you something. One thing I love about being a populist is that I am always for the little guy. Okay? So when the little guy is winning, I feel good. Okay? Now, what is happening right now with GameStop, Nokia, AMC, some of these stocks that have been heavily shorted? That means that big companies and hedge funds and financial institutions have bet against those stocks, right? They've bet that those companies are going to continue to lose money and basically may go bankrupt. That's what they're betting on, okay? These big companies have shorted these stocks, okay? And basically they make money off of other people's misery, right? Certain groups on Reddit, like WallStreetBets and other investing subgroups, have decided that, you know what? We gonna take some of our money back, right? We're going to get back at some of these big hedge funds on Wall Street by causing a short squeeze. Okay, so basically this is how shorting works. Shorting basically is when you borrow a stock, right, at a certain price from another investor, and then you sell it immediately for, let's say, like $10 or whatever, right? And you're betting that the stock is going to go down. So if the stock goes down to $5, right, then you buy it back at a lower price. Okay, so you sold it at 10, you bought it back at 5. That means that you made $5. Okay, so that's basically what short selling is. Now, people that continue to short means there's more selling in the marketplace, which in turn can drive down the stock value of a company despite its fundamentals, right? Because there's just so many people that think it's just going to be bad. It may be trading at less value than what it's actually worth. Okay, so a lot of people think that this is what has happened with companies like AMC, Nokia, GameStop, etc. Right? And keep in mind, guys, I'm not a financial advisor here. So this is just me talking about this. Again, I am not liable for anybody making any decisions based off what I'm saying. So some of the people on Main Street, right, have decided that, you know what, we're going to stop the madness and we're going to drive the price up. Okay, which means they're going to place a lot of buys. They're going to buy a lot of call options, and they're going to drive the price up, which is going to cause short sellers to lose a lot of money, which is what they call a short squeeze. Okay, because if you sell a stock at $10, right, to try to short it, you borrow the stock and then you sell it at $10. If it goes up to $15 or $20, you now have to buy that stock back at more money than what you originally sold it for, which means you're going to lose, money. And really, theoretically, short sellers can lose an unlimited amount of money. Okay, they can lose an unlimited amount of money. So what we see happening here with GameStop and all these other companies is that, so as you can see earlier this month, around the 8th, it was trading at about $13, right? Again, GameStop is a company that's going out of business. It is not something that I don't think any reasonable person would recommend as a long-term investment because they don't buy games in stores anymore. They just download them off the internet. Definitely not recommended. That company is basically like Blockbuster, right? It's a company of the past. But because Main Street decided that, you know what, we want to take some money back and we want to punish short sellers, a lot of people started dumping tons of money into GameStop, driving up the price all the way to $310. Okay, I mean, this is crazy, right? This is crazy amount of growth in such a short period of time. So a lot of people made money off this, and what's just hilarious to me is to see the people on Wall Street cry like children over the fact that some people on Main Street have made some money, right? Because you've had, people like Elon Musk have jumped in, other people have jumped in, everybody's basically jumped in on this. And as you can see here, GameStop's kind of falling again. So, if you get in on this, make sure you have your stop loss orders just in case it falls too much. But anyways, so let's take a listen at some CNBC analysis here to see just them squirm and cry about, some people on the internet making some money off Wall Street.
In these markets, namely We're calling it the Reddit trade, for lack of a better term, but certainly the focus on huge short positions that are in certain stocks and the decision to then go long those stocks to force those who are short to cover, squeezing them ever higher. This continues this morning in a crazy way. Bob Pisani, I want to bring you in. But, I wonder as well, as we watch an S&P now that's down 2%, and as I continue to hear from people that I'm speaking to of hedge funds that are under a great deal of pressure as a result of being short some of these names, and there are a lot of them now, and having to potentially sell their longs. I don't know to what extent, Bob, you think this is having an impact on the broader market, but it's not too hard to imagine that might not be the case.
Yeah, certainly hedge funds have positions. They're not just short stocks. They're long a book and they're short a book. And when you get the positions out of whack here, they have to maintain certain levels of longs and shorts, and they have to adjust their portfolios, and that can have ripple effects on the market. So yes, I think it does. I think there's some broader things going on here that's not just that related. I think there's obviously some concerns. Earnings are good. If you look at Microsoft, it's not going to get any better than Microsoft. Their numbers were just simple.
So, real quick, look at the percentage that these heavily shorted stocks are going up. I mean, these guys on Wall Street are losing a ton of money, okay? And what these guys are concerned about, or what they claim they're concerned about, is the fact that because they have to cover these short positions, right? And because of the interest that comes along with borrowing, when you short, what happens is that they have to sell long positions, which means positions that they have bought stocks thinking that they're going to go up. And because they have to sell positions in good companies that have good fundamentals, that may have some broader effects on the market as a whole. Just because all these people are pouring their money into stocks that these companies have shorted. And we're talking about billions of dollars here, okay?
Fantastic across the board, yet it's up only 1% because it's moved up huge going into earnings. So we've got a problem here with stocks moving up in expectations of great earnings, and we're getting them, so it's hard to move the market forward. I think there's a little bit of that as well. As for the short story, and there you see Microsoft down here today. But remember, 117, a week ago in anticipation of earnings? It goes to 132 a few days ago, and now it's up there. So here's those heavily shorted stocks. And of course, as David mentioned, it's not just GameStop. We were talking all yesterday about all these names, including Tanger Factory Outlet and iRobot and companies like that. I think here's the question. What's different from the 1990s chat rooms? We spent a lot of time, David and I, in the chat rooms in the 1990s watching that. And there are some things that are very different from the 1990s. The information flow is very different. The ease with which you get information and get access to it, including on your cell phone, is different. The zero commissions are certainly different and may be a factor. The overall gamification of trading is different. That you can trade stocks like you do sports betting, which also didn't exist to this extent in the 1990s. You have to know that there's a difference. But then there's things that are not different, and I think that's very important to point out. The old-fashioned sense of greed, the whole herd behavior. There was a whole group of behavioral economics terms we all had to learn after the dot-com crash. We all got very familiar with concepts like herd behavior, which is the idea that we're all just going to move together. Confirmation bias, that investors kind of believe what they want to believe, what their biases want them to believe, and they just look for reasons to confirm that. The gambler's fallacies, that a series of wins are going to go on forever somehow, and you're never going to lose. And finally, loss aversion, something we all became familiar with, which is that the great weight of concern for losses, the concern for the weight of losses is much greater than from market gains. And we'll see if loss aversion becomes an issue in this story. It could well be. I think, David, the question here is there something really different here?
Well, yeah, it's kind of different. It's kind of different, Bob. No, I mean, in the sense of, you referenced that period of time that we all remember quite well, and we've made certainly allusions to the late 90s, but I don't quite recall the focus on companies that had large short positions, certainly not larger cap companies that we're seeing now. I mean, you had a lot of small caps that moved. Typically, it was just on the buy side. I'm not quite sure we've seen anything quite like this. And by the way, the sums of money here are fairly significant. I mean, we talk about retail, but there's some people stepping up for some large options purchases here who have to put up a decent amount of capital to do that. Not to mention, I mean, somebody buying the 200 calls yesterday on GameStop that I guess were listed and now has made a fortune on them. There are things here that are unique.
Yes, the 1-2 punch of the ocean of liquidity provided by the Federal Reserve, combined with that gamification of trading, combined with this strategy of buying out-of-the-money calls, has proven very effective. I'm talking about a broader philosophical issue, David.
Yeah.
I'm talking about the idea, which is, if you want to believe that GameStop's going to be $200 6 months from now, you have to basically believe that fundamental analysis doesn't really matter, that even technical analysis may not matter. Do you really?
Yeah, I mean, he's right about that, right? And I think that's enough for them guys getting upset. Because, I mean, those guys are salty. They're super salty about this. But, yeah, what he's saying is that, and essentially what I was saying is that there's no fundamental analysis here when it comes to GameStop. This has nothing to do with earnings, right? There's no technical analysis. Nobody knows what's going to happen with this. This is purely speculation. This is purely people that's basically gambling their money, which is not necessarily a good thing. But at the same time, at least short term right now, they have definitely caused a lot of big hedge funds a lot of money. You know, these are the same people who made money during the recession, right? Where they sold, securities to people, and then they bet against those securities knowing that they was bad, right? And that's the type of stuff that, happens, right, with these financial companies, and then they win off of people's misery, and then you turn around and, Main Street wins a little bit, right? Like they get a small win and these guys go crazy. They start talking about, oh, this is bad, fundamental analysis, and, does anybody really believe GameStop is worth this much? Of course not, right? Of course not. But these guys have made money off of people's misery. And right now we're going through a pandemic. People sitting at home, they have a ton of money, right, that they aren't necessarily using because people are afraid to go out, right? They're afraid to spend their money. So they're trying to figure out how to make more money. And a lot of people have been getting into trading, making money while they're sitting at home, not doing anything, which is the exact same thing a lot of these financial institutions do, right? They make money sitting on the computer, not really contributing anything to the economy. So, I just think it's interesting to see something like this happen. And it's just one of those things I think both sides, the populist crowd on the right and the left can both, agree that, it's nice to see, Main Street get a small win here. So let me know what you guys think. Like I told you, there's no fundamental analysis going on here. So, I would not be super long on these stocks. But, hey, do you. Let me know what you guys think. Make sure you like, comment, and subscribe. Most importantly, share a Black conservative perspective. Peace.